Hi, everyone, and welcome to The Hash, your daily beat on crypto and culture. It is Friday, so we are winding down the week here. On the show, we have Will Foxley, Jen Sanasie, Ben Powers, and David Morris. Welcome to the show, guys. My name is Naomi Brockwell. We're going to start off by talking about bills and taxes. So I'm going to hand this straight off to David. What is going on there?
Yeah, so this is actually pretty genuinely concerning. For those who aren't aware, the House and Senate are both working on a pretty large infrastructure funding bill. The total new spending is about $550 billion. And for various legislative reasons, they have to include what are known as pay-fors in that bill to a certain extent to show that they're generating new revenue to match this new spending. And about $30 billion of that new revenue right now is expected to come from a provision that would add some new tax requirements and reporting requirements to crypto operators. Now, this is still in process. Coin Center is actively working to deal with it. But the issue here is that the language in the bill, we are led to understand, could lead to some real problems with classifying miners and DEXs as brokers, as well as potentially requiring software and hardware wallets to report transactions to tax authorities, which, leaving aside any political or, whatever other questions, is technically impossible for the most part. So there could be a real train wreck here, and we're sort of watching it. And we don't actually have the exact language yet because this is still all being negotiated. But our understanding is that there are some problems. So it's a tax bill that is flawed. We're hoping to fix it, and we're going to be keeping an eye on it over the next few days. But who knows what will happen because this is a big omnibus spending bill that there's a lot of pressure to get passed and might not be a whole lot of time to work out these kinks, which is part of the problem. Ben, you're nodding your head, which is the only reaction I'm seeing of anybody on the screen. So you get to talk about it.
We're just so sad.
As seriously
as Ben.
No,
okay,
I
he
think,
just has a
I
big
try
head.
to emote, I'm just saying, we can go there, I guess. No, I think that what we're seeing here, unfortunately, is
I live in a glass house on that one. So
I think what we're seeing is the fact that, they want to identify the pay-fors now. Like the idea of spending this much money has obviously become a little bit of political football, and Democrats have been negotiating with Republicans on it to try and find some measure of bipartisan support to get it put through. And so obviously saying you're going to find ways to pay for this is important. That being said, I think that, again, we're running up against the sort of what feels like the eternal friction around like legislative language being applied very broadly to a very complicated and nuanced industry. And unfortunately, I think that industry does not impact as many people as these lawmakers represent, for example. And as such, they're not going to get the public outcry by including it, right? Like, it's not a huge constituency that they're going to have to report to. And so you're not going to see the potential political pushback. And it feels a little bit like a scapegoat for finding some pocket change here or there. So I think it's really unfortunate. I think that that's what's making this politically viable. And I do think that that is going to be a problem and could make it troubling and tricky in terms of trying to get that language changed in a way that doesn't, create a whole host of cascading issues. But Jen, I'll give this to you.
And I will very briefly on the issue of political pushback. According to our sources, this provision was introduced by Rob Porter, who's one of the main sponsors of the bill. So anybody who wants to reach out to his office to express concerns, he would be the person. I saw Will contributing something.
Yeah, can I jump in there really quick? Jen, I'll give it to you. I promise. This whole topic it's coming at such an interesting point where we saw a lot of exchanges like Binance, Wobi, OKX facing so much pressure on international front throughout the beginning of the year. And now it's before Congress. We also had Angela Walsh and Jerry Brito speak before Congress the other day, talking about the role that crypto providers, crypto miners, and even DEXs or exchanges play within the crypto ecosystem. Are they intermediaries or are they not? And to be frank, a lot of the information that was presented seemed very inaccurate. There was some very powerful information that was presented before Congress and some that was just flat out wrong, calling miners intermediaries in a financial sense, which is just incredibly wrong. And so I think this speaks to the need for more education on Capitol Hill and the need for more, I don't know, I want to get Naomi's take on this. But I see where lobbying comes into play here, even though I don't like the idea of lobbying. And Eric Voorhees had a great tweet about this with Ryan Selkis the other day. Like, do you want to give up the moral high ground by bringing in lobbying agencies on behalf of the crypto markets? Regulators could do a lot of damage to the crypto industry here, just because there's so much misrepresentation and so much miseducation on this topic. Naomi, I want to hear your take on that, but give it to Jen really quick first.
Naomi, go for it, and I'll go after you.
No, Jen, you hop in there.
Okay, so I was just going to say there's already so much. When we look at what's happening with taxes in the US and crypto right now, it's already so unclear. And so if this bill goes through, we're just like adding more layers of mud, I feel, to what's happening with regulation and taxes. And if this bill goes through, I feel like we're in for a world of hurt, just kind of echoing what Will said. I mean, if you look at what David was saying, software wallet developers, hardware wallet manufacturers, multi-sig service providers, liquidity providers, DAO token holders, and even miners, we've already seen it took them 6 months to change one word on a tax form. I mean, how are we even going to start to look at this? So it just seems very confusing. I think there is a real need for education when it comes to looking at this, and it just feels like they're just kind of grasping at straws here. But Naomi, I'll kick it back up to you.
Yeah, I mean, lobbying is this really interesting and awful area, right? And I totally understand Eric's point, because it does feel loathsome to participate in this. It's sort of the same way that a lot of people feel bad about voting. They don't want to participate in this system that they think is completely corrupt and rigged anyway. And so people don't want to participate in lobbying. But the fact is that this is how our society is run. And if you aren't sitting at the table, then you're going to be destroyed. And currently there is an attack against crypto. So I am very grateful for, organizations like Coin Center that are doing doing the hard yards and educating politicians about this. I mean, Caitlin Long is another person who just put in tremendous work, and she's reaping the rewards. Right? Wyoming has fantastic regulations in place now. I think it is an important thing for companies to get involved with, even though I hate the whole system in general and would like to see it completely changed. I mean, the fact is, you've got these politicians who are not, they're not understanding any of the things that they're putting through, because each bill that they have to consider is pages, hundreds of thousands of pages long. They have all these interns that are going through and telling them what to think. And basically they're having lobbyists come in and say, hey, this is why you should trust me. This is what you should think about this bill. And what are they going to do? They don't have the time to dig into this. So they're just going to find the people that they think they can trust. And I think that crypto people do need to get in there and create relationships. And I hate, it makes me feel dirty to say that, but it's just the way that it works, because crypto is under attack right now. And we need to fight back on all fronts, on the decentralization front, on the lobbying front, on the agorist front, on, all of that stuff. I think it all needs to be happening simultaneously. But let's wrap up there and move on to the next topic. So that is me talking about regulatory woes. Oh my gosh, Binance. So Malaysia apparently orders Binance to close. Malaysia's Securities Commission said that they're illegally operating a digital asset exchange. The country's laws demand that all such exchanges must be registered by the Securities Commission. And so that's being shut down. But you've also got Europe. Some countries will be unable to open new derivative positions effective immediately. They're planning to wind down futures and derivatives, starting with Germany, going to Italy and the Netherlands. It just comes at the end of just huge regulatory scrutiny that we've seen over the past few weeks that has really come to a head ever since they started looking at these tokenized stock options. I mean, Binance, I've been very clear about Binance. As much as I don't like centralized exchanges, they provide an incredible service, and there's a reason why people all over the world flock to them and use VPNs in order to obscure their identity so they can access them, because it really is the most assets, the best liquidity. And I think that governments around the world are getting increasingly scared about this and are cracking down. But I'm going to throw this to the group. Will, what are your thoughts on all of this? What is the future of our wonderful, decentralized, no headquartered Binance? Is that illusion out the window now?
Well, to look to the future, we must go back to the past. So I think looking back to the 1930s and 1940s is where we saw a lot of these securities regulations set up. And that is what we're dealing with today. laws from a century ago, literally a century ago, deciding
Insane.
how technology should be implemented today, which is just insane. And that's how these things work. If you're a regulator, you live in a regulatory space, your job is to protect your moat. The rules are set before you. That is what your job is to do. So in a sense, can't blame them. They're just following the play rules they have to go by. But the laws definitely need to change these instances. The reason that they have these securities laws all around the world is because the US led those rules back in the 30s and 40s and then crafted them over the previous century. And then all these other countries have somewhat adopted them in their own fronts around the world. And now we're seeing those same laws strike down companies like Binance, which are really pushing the edge, of course. And the reason regulators are worried is because they think that it might hurt their consumers in their own country. And perhaps it does, but that's also the cost of innovation. If you want to have digital assets, if you want to be able to move money quickly from point A to point B, then you're going to stub some toes and hurt some fingers. So overall, pretty frustrating to keep seeing this news, but it should just be expected. That's where crypto's at. It's a $2 trillion industry. That's just what's going to happen. People are going to become interested in this. Jen?
I wonder if Binance regrets the tokenized stock offering, because it seems like that was the straw that broke the camel's back and shone this huge spotlight on them. I was thinking about CZ this morning stepping down as CEO and looking for someone with a regulatory background. And I feel like at this point, it's almost too late. Do you think a new CEO can really stop the regulatory crackdown that's happening for them all over the world? I'm not sure. I would imagine that they have really great legal counsel advising them. So I don't know if a new CEO can really help. What's going on here? So I don't know what's going to happen for Binance in the future. This is just, really sad, but I'll kick it off to you, Ben, for final thoughts.
Yeah, I just think it's also worth pointing out like this sort of regulatory fervor we're seeing not only with Binance, but also we see like FTX starting to police itself a little bit. We're starting to see other drawbacks in other areas, particularly in the US. I think that regulatory scrutiny is also what gives the sort of political capital to like put a payoff like or a pay for like this in that bill we were just talking about, right? Like as it raises in profile and as you see like, oh, these things might be risky and like, as you're having hearings in Congress. And that's what, lets this be seen as like, oh, we should be taxing these things. Like these are risky. If they're going to exist, we need to pull them back, but also have like use them to raise revenue for other spending bills. So I think these two things are connected. And I think you're going to see potentially other countries go in similar directions as like seeing crypto as a source of revenue for expanding tax bases.
For sure. Well, we are going to take a break now. And coming up after the break, we're going to be talking about ARK investments. What's going on there? Some interesting things we'll dive into, but stay tuned. Coming up after the break.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Okay, welcome back to the Hash. So we're going to talk about Robinhood. So a little tangential to crypto, but they do offer crypto on their platform. Yesterday they IPO'd and it had a bad side and a good side. The bad side is that the stock set the lowest or biggest drop in a day for any stock price listing, 8% or over 8%. Good side, ARK Investments of its size, ARK Investments took up a lot of shares from that listing. So kind of interesting to see that ARK is doubling down on its kind of innovative role in the space where it's just buying like GBTC, more like Bitcoin offerings for other companies. I think they have a large Tesla stake. But also we saw that like Robinhood's IPO did not go off super well. So David, I want to get your thoughts on this. Robinhood's obviously been on the news for the last 6 months. And then IPO was a big deal, but less than Coinbase which was also interesting. A lot less hype. I don't think a lot of people were talking about it as much as they were other crypto firms going public.
Right, and it's so like there are a couple of things that I would point out. One, which I've written about, and you can find my column from a couple of weeks ago, which is that the market cycle factor here is huge. We've had a big transition from 3 months ago when Coinbase IPO'd, and markets were way more active and moving upward more definitively and a little bit more volatile. And I think that helped Coinbase because that the meme stock trading thing was still going on. And so Robinhood has maybe missed its window a little bit, and that might be harming it in terms of its IPO performance. I will say I don't love Robinhood. In fact, I don't like Robinhood. I think it turns stock investing into a casino. However, as an investment, I'm shocked that it's performed this poorly. It really seems like there's so much long-term demand for this service. I can't see, I haven't looked at their P&Ls or anything, but at least in principle, this seems like a solid investment. So it's very interesting for me to see it go down this much on its first day and, do your own research. But it seems like there might be an opportunity here if you're long-term. Ben?
I think you saw or particularly maybe in comparison to Coinbase, like Robinhood has just been through the ringer, like the last 6 months that, it's speaking about like the memification of stocks, David, like Robinhood had to like halt trading because they didn't have liquidity on hand to like pay out for those transactions and stuff like that. That caused a whole amount of ire for users. And also people, get upset with them for the app kind of glitching out or shutting down or not letting them withdraw crypto, for example, exactly when they want to, when there's like a boom in the market. And so not only that, you have
although to be clear, Coinbase does that too consistently.
Coinbase does that too, but I think Robinhood has a higher profile in terms of just being in the public eye a little bit more and not just being solely kind of crypto focused entity. And so I think that could be a part of this as well. Additionally, as CoinDesk has documented, there's like a FINRA investigation going on in terms of some of this and with Vlad, and like there's just a lot of kind of stuff below the surface that I think could have influenced this. But chief among those was like there's been a ton of public reporting on it that could have had an impact here.
Yeah, I'll jump in as well. It's really interesting to see just such a dramatic drop and wondering what that's caused by. And, if you just look at the history of Robinhood and the ringer that they've been put through over the past few months, and it seems like, they tried so hard to pivot, and after their $75 million settlements, they were like, yeah, we're putting on all these training wheels and we're completely changing. And it seems that the market was just maybe not impressed by that. I don't know whether the market is seeing these measures as actually bad things or whether they're seeing them as not enough. It's not clear, which way it's going, but it's clear that Robinhood isn't in favor that much at the moment. So that was very interesting to me.
Well, Naomi, do you think that's maybe because I was just going to say, do you think that's maybe because there's so many other options now? Even if you're just learning about crypto, you don't you don't have to go to Robinhood. There's so much education out there, and there's so many other ways to perform the task that Robinhood offers. So I feel like the negative headlines, all the things that we've been talking about over the past 6 months, have really affected them, and people are looking elsewhere. But Will, let's hear that interesting thing.
Well, I think if you look at tech stocks in general, a general trend among them is that they don't do well when they're first listing. Dave can probably correct me on that, but I think we've seen it with like some other stocks like Uber over the years. And another one off the top of my head, I'm not remembering, but Coinbase also didn't do so hot like immediately afterwards. And I think over time they're down quite a large percentage. And I think to a degree, that's just how a lot of these IPO listings work, is that you kind of have a higher valuation and then you drop a little bit as people who were invested in the company for quite a while, like VCs and such, they're taking out profits. That's just part of the VC game. So I think to a degree that kind of gets lost in the numbers, just looking at 8% drop on the initial day. Like obviously that's not what you want to be in the record books for, is having the biggest loss among like qualified firms on your IPO day. But at the same time, hey, Robinhood listed and they're a public exchange now. That's pretty huge news for them. And if they're really interested in democratizing finance further, then this was a big step in them being able to capitalize on their position. Jen, we're going to move over to you.
One last thing I'll throw out, and then I'll throw to Jen, just to remind people that about 30 million, some substantial portion of those IPO shares were sold directly to Robinhood users through the app, who have now lost money in Robinhood by investing in Robinhood. So, in terms of branding, not a great look. But Jen, you've got next.
A galaxy brain.
Okay. I have a question for everyone on this panel. Has anyone ever been to Lollapalooza? Oh, okay, that
Not
makes
yet.
none of us. But there's still time. All right, so Lollapalooza is underway. It started yesterday, and Solana is the official blockchain of the music festival. So the project has sponsored one of the stages and has ads running throughout Seoul. The project's native token has risen by 7% since the festival started, and Solana is behind Lollapalooza's NFT marketplace, where there are some pretty cool NFTs up for sale, including a 1991 tour poster signed by the festival founder. So we've talked about crypto and sports, FTX sponsoring massive arenas and sports teams. Now we have Solana, the official blockchain of Lollapalooza. I'm going to throw this down to you, Ben. Did you think that we were so close to music festivals having official blockchains?
No, but I think this makes sense in some ways, right? Like we're seeing
Did you ponder that before you went to bed at night? Every night.
Yeah. I think about where the Solana blockchain is going to appear in my life next. No, I think we've seen like FTX really lead the way, and even crypto.com with like sponsorships around sporting and stuff like that. And I think NFTs do have a lot of crossover with music. And maybe more so to me, I think that, why not like get in front of lots of people, like try and show them what this art is, how it connects to music. More so how I think about this, though, is I think that it presents an interesting opportunity, right, to do like NFT platforms and marketplaces, particularly around events where you have like an invested community already who might be interested in that, as opposed to just sort of like a general standing marketplace where people are like incrementally introducing like, oh, like here's this drop of these NFTs or stuff like that. I think that might be something we see more just as we continue to try and figure out like what the best sort of inflection points for NFT drops and marketplaces are. Music festivals seem to be a really natural one for that. Because I'm thinking also about like the 10th anniversary of Reasonable Doubt, the Jay-Z NFT. They tied that to a seminal event, and that seemed to do fairly well.
Yeah, I'll jump in there really quick.
Not the 10th anniversary. Anyway.
Sorry. The FTX thing is interesting.
Sorry. Will, go ahead.
Because, Solana and FTX obviously have some close relationships. I don't know them specifically, and I won't say as far as it's a partnership, but I think there's just like some investments on either side. And FTX is really smart about how it does its marketing. They have an MLB marketing platform. They have the signing rights to Miami's Heat arena there, and they have a few other partnerships that are really interesting with like the gaming company. So they're really smart about getting these marketing campaigns in the public spotlight. Lollapalooza obviously is like a music festival that everyone in the United States at least knows about, and a lot of people in the United States have attended. And I think that's smart for Solana to be drifting that way. Another thing that's interesting to me is that a lot of these blockchain applications in 2020 and 2021 are a lot different than the ICOs we saw in 2017, or at least there's similar marketing campaigns, but I just have a feeling that they're going to do better and have more legs going forward than some of the projects that we saw in 2017. Like Potcoin is not sponsoring Lollapalooza right now anymore. And I feel like Solana could be sponsoring something in 2025, maybe just because they manage their treasury well, or it's because it's a project with legs.
Yeah, and just on the ICO comparison, it's an interesting point, Will, because back in the day you had all these individual projects that say, we are going to be the platform where these people are going to come and do these things on it. And now we've had many, many years of many, many platforms kind of finding their feet, and now it's the people coming. At the start of this year, you had Kings of Leon. They made history. They were the first ever band to release their album as an NFT. I think they've since made like upwards of $2 million from that sale. It's definitely something that a lot of artists are looking into. And so now that Lollapalooza is coming on board, like it makes sense that all of these existing companies are now trying to say, well, how does blockchain integrate with what we're doing? Can we sell merchandise? Can we, sell products and all of that? And they are starting to do that because we do have the infrastructure now. We do have the ability for these people to be trying out new things in this digital world, which is kind of exciting. But David, I'll throw to you.
Yeah, so one important thing that it just crossed my radar in terms of NFTs. The interesting thing is that compared to 2017 and ICOs, NFTs are definitely not securities. So that's one reason that these applications are viable, because somebody like Lollapalooza would not want to get involved with like an ICO, even back in 2017, because the regulatory risk was so high. And then I would just kind of echo some version of what Naomi just said, which is, I mean, several of us have been around for a while, and we've gone through these waves of new platforms saying, like, we have this partnership and that partnership, and usually there hasn't been much substance to them historically, and even some misrepresentation. So it's such an evolutionary moment to have real partnerships that actually have customers already lined up for them, and real sort of introducing new people to the entire space through things that aren't directly connected. So it's exciting in a very broad scale to see this evolution to something else. I don't know if we're going to Ben or if Jen wanted to tack on one more thing here.
Yeah, we can go to Ben.
I'm going to take this one and close this loop and move us on to our next story. So this one I thought was particularly fun and juicy. TechCrunch had a scoop that gave us better insight into the Boring Company and the Loop, which is at the Las Vegas Convention Center, and how it operates. So using a public documents request, they got details about operations at the Loop, which opened in June. And among these was a ride script, which every new recruit had to follow when curious passengers asked questions. So basically, somebody asks you something, the Boring Company's like, here's exactly how you should respond. So among these, there were a lot of really funny ones that I found. But if somebody asks you what Elon Musk is like, you should be able to expect the answer, he's awesome, inspiring, motivating. And I just thought, on the one hand, like this shows how
in that exact
same inflection. To me, I thought this struck me because it sort of seems like how tightly Elon wants to keep a grip on kind of his cult of personality in terms of being this, deity and mover and shaker and things. And particularly, I think this stands in contrast to, the ways that he unfortunately really does affect the Bitcoin price with his tweets and other things and sort of raises the stature of it. So there was a lot to unpack here, but I just personally found this story really interesting. And Naomi, I want to throw it to you for initial thoughts.
Yeah, I mean, I know what the rest of the group is going to say because I was picking up bits beforehand of like, this is terrible, this is so controlled. And I'm going to push back a little bit on that messaging, right? Because we have to ask the question, are they spreading misinformation or are they just creating uniform messaging for their company? I mean, I don't know of any company that doesn't have like messaging standards where they say, don't talk about this, or like if someone asks this is kind of where you need to go. This is, I think, has been sensationalized a lot because it's Elon Musk, because he is such a cult of personality. I think everyone wants to read into it that, oh, well, he's such an egomaniac and he's controlling it. But honestly, I mean, it's a major company. Of course, they're going to be controlling their messaging. But the big question for me is whether it is misinformation. There were some little things that kind of like made me a little uneasy when they're talking about like safety records. But at the end of the day, I didn't see anything that was misinformation. It was just more like, if you want the actual numbers, go to the headquarters. That makes a lot of sense to me. If you have someone driving your car going really, really fast, you don't want them really thinking about like, well, what are the latest numbers that I've been keeping up to date with? Like, you want them to be concentrating on driving. That was something they mentioned in this document, like keep talking to a minimum, focus on the task at hand. Here are things you don't even have to think about that are pre-scripted. Like, I honestly, I kind of understand all that. And really my only question is whether they're just going with uniform messaging for the company, or whether they're actually being deceptive in the way they represent things, which isn't totally clear to me, but I'm erring on the side of they're not being particularly malicious in this regard. But Jen, I'll throw it to you for your thoughts.
So just off the back of what you were saying, Naomi, if you're driving a car really fast and you need to concentrate on driving, do you want your drivers to be thinking about the exact right messaging that they have to say, rather than, like actually maybe for any questions about Elon or any questions about how long the program has been in place, just direct them to the website? I feel like that would be a lot easier and actually accomplish the goal of the drivers not having to concentrate. It just, as I was reading through the list, I was like, these people need media training. Like, this is a lot to remember, and it's very specific. Saying that Elon is a really great leader when maybe they don't believe that. Like, why do we have to tell the drivers to say he's a great leader? Maybe they've never met him, and it's okay to say that. So it just felt.
I would be so surprised if they have met him, Jen. Like, I don't think these people have anything to do with Elon, have any idea of how he runs a company. Yeah. Like.
So maybe, I don't know. I just feel like honesty is the best policy, and this feels a little extreme, but I'll pass it back off to you, Ben. I think I saw your hand go up.
David, take this one and then I'll jump in.
Yeah, well, it's very interesting, Jen, that you said media training, because I think that the unspoken part here is that a lot of this is actually intended to prevent journalists from getting in these cars and asking drivers questions and then getting material to use. And, like, that's worrisome only in the larger context. And I'm going to make a slightly complicated point here, but to get a little bit meta about what Naomi said, like the fact that them having uniform messaging makes news reflects some problems with Elon Musk's reputation. And this idea that he's so controlling is based on some real things. So, for example, Tesla actually closed its public relations department last year. It does not have anybody on staff to correspond directly with media. Musk is part of this much larger spectrum of Silicon Valley anti-media rhetoric that also includes people like Peter Thiel, who funded the lawsuit that shut down Gawker. So this is the larger context for what, from another person probably would be unremarkable, but for a Musk company speaks to some larger issues. So I think that maybe the reaction is the issue, if that makes sense. And I think that this is ultimately substantially about controlling reporting on the project. Not so much about
I think
the public getting into the cars and asking questions.
Yeah, I think it's a weird one in terms of my sort of irksome sensibility on this is more so about the control of information and like who gets to speak and who's in positions of power, right? Like I think NDAs are absolutely absurd. I think that Silicon Valley relies way too heavily on them, but I think workers should be able to talk about their experiences and they should be able to like have a free-flowing dialogue with an individual they're engaging with and not, be essentially treated as automatons and just, do one thing, say one thing and everything else. And that's like where my frustrations with this come from because like Elon gets to pop off on Twitter and say whatever he wants and cause, financial distress, cause financial gains, do whatever. But literally, you can't say anything other than, yep, he's a great leader. He motivates us to do great work when asked like if he's engaged with a company or what somebody's experience might be. And that to me, I think is just quite a frustrating ideal when you're talking about like any form of free speech or trying to control what anybody has to say, particularly when the power dynamic is so like unequal when it comes to particularly these individuals and Elon Musk.
Yeah, just as I wrap up here, I will just say you don't want to be as presumptuous to think that it's Elon who's directing this. It could even be Elon's outspokenness on Twitter that's causing the company at large to say, let's clamp down on messaging because he's already done so much damage. His company, yeah. Well, we're going to wrap up there, so we will continue our Elon chatter offline. But thank you so much, everyone, for joining in on today's episode of The Hash. This ends another week, but it doesn't end the CoinDesk TV videos that you can be watching. So later on today, we have Christine Lee on All About Bitcoin at 3 p.m. Make sure you tune in for that. Otherwise, we will see you all on Monday, 9 a.m. for more Bitcoin-related things. And as always, we are at 12 o'clock every single day. Thank you so much, everyone, for joining us. Bye.
Thanks, everybody.
Monday.